Most people who want passive income are waiting on the wrong input. They are waiting for money to invest. They believe the machine requires capital to start, a portfolio, a rental property, a pile of savings doing something in the background while they sleep. That belief is the reason most of them never build anything. The actual input is packaged knowledge. A problem you have already solved converted into an asset that delivers without you being present. The machine does not require money. It requires something most people already have and have never treated as inventory. In this video, you will learn exactly how to identify that asset, convert it into one of 3 income structures, and walk through the 4-stage construction sequence that makes it self-operating. Not theory. A sequence. By the end, you will know whether you are holding the raw material right now, and what to do with it. What passive income actually is and what fails the test. Start with a precise definition, because the word gets misused enough that it loses its function. Passive income is income generated by an asset that operates without your hourly presence. The asset does the work. You're not exchanging time for money. You built something that exchanges delivery for money. That distinction matters more than people realize, because most things marketed as passive income are not. Freelance work fails the test immediately. You are present for every dollar. Stop working, the income stops. Drop shipping operations where you are managing daily inventory, supplier disputes, and customer service. That is labor with an e-commerce label on it. Affiliate links with no traffic driving people to them. That is an asset without a distribution engine. It does nothing on its own. The filter for what qualifies is simple. If the asset stops working when you stop working, it is not passive income. It is self-employment with extra steps. Run everything you are considering through that filter before you build anything. The sequence you're about to hear only applies to structures that pass. The skill inventory audit. Before you pick a format, you need to identify the raw material. Here is the test. Think back over the last 2 years. Find any moment where someone paid you for something, thanked you for explaining something, or came back and asked you to do the same thing again. That moment is a data point. It tells you that what you did naturally solved a problem that someone else could not solve themselves. That is the definition of packagable knowledge. The asset is not your industry. It is not your job title. It is the specific mechanism, the part that other people consistently struggle with that you move through without friction. An accountant who explains tax logic in plain language has a specific asset inside their broader expertise. A designer who has a repeatable visual system is sitting on a documented process most clients would pay to access directly. A project manager who always brings late teams back on schedule has a methodology, and that methodology, extracted and packaged, is worth more than their day rate. The inventory is already there. Most people have never looked at it as a product. That is the only reason it has not been converted yet. Once you have identified the knowledge, you have 3 structural options. Each has a different build complexity and a different failure point. The first is digital products. This is knowledge codified once and delivered infinitely, with no marginal cost per unit. A template, a guide, a course, a toolkit. You build it once, every sale after that requires no additional labor. The failure point here is distribution. Most people build the product and then discover they have no audience to sell it to. The product is not the problem. The second is content with monetization. You build an audience by demonstrating the knowledge publicly, through written content, video, audio, or any format where expertise is visible. The income is indirect at first: platform revenue, sponsorships, affiliate structures tied to things you already use and recommend. The failure point here is inconsistency. The engine shuts down when content stops. The asset is the audience, not the individual piece of content. Building the audience takes longer than building a product, but it creates a distribution system that serves everything else you build afterward. The third is productized services. This is a repeatable service with a documented process, offered at a fixed price, structured so that delivery does not expand based on client requests. You're not selling your hours, you're selling an outcome with a defined scope. The failure point is scope creep. If every client engagement becomes a custom project, the productized structure collapses back into freelance work. The documentation has to be strict enough to hold all 3 paths work. None of them are fast. The question is which one your current situation can support first. If the breakdown is already landing, if you're recognizing something in your own skill set that you have never looked at as an asset. the subscribe button is there. This is what the Vault does every week. Build the framework, then build the thing. Regardless of which path you choose, the build sequence is always the same 4 stages. Move through them in order. Skipping stages is the most common reason people spend months building something that never generates a dollar. Stage 1 is extraction. Is extraction isolate the specific knowledge that solves a specific problem for a specific type of person? Not I know marketing. Not I understand design. The specific thing, the part that produces a result other people consistently fail to produce without help. Write it as a 1-sentence problem statement. If you cannot do that, you have not extracted anything yet. Stage 2 is packaging. Convert the extracted knowledge into a format that delivers without you present. A recorded lesson, a written system, a structured document, a template with instructions built in. The test for whether the package is complete: could a stranger use it to get the result without asking you a question? If they need you to clarify, the package is incomplete. Stage 3 is distribution. Place it where the audience is already searching, not where you are comfortable, where they are. That means understanding the specific platform, search behavior, or community where your target person goes when they have the problem your asset solves. Distribution is not promotion. It is placement. The difference matters. Stage 4 is automated delivery. Payment, fulfillment, and access should require no human action after the initial setup. This means a payment processor connected to a delivery system. Someone pays, they receive access. You're not in the loop. If you're manually sending files, invoicing clients, or granting permissions by hand, the automation stage is not complete. Build it until it runs without you. Most people who build a passive income asset for the first time are thinking about the large number. The monthly income goal, the financial milestone they read about, the number that would change something real in their life. They treat the first $100 as a rounding error. They skip past it without pausing. That is the structural error. The first $100 from a passive asset is not a milestone of scale. It is a proof of concept. It answers one binary question. Does the system work? Either the package delivers, the distribution places it in front of real buyers, and the automation processes the transaction, or it does not. That question has to be answered before you invest more time scaling anything. The people who spend 6 months building a comprehensive course before making a single sale are not being diligent. They are delaying the diagnostic. They are optimizing something they have not yet confirmed will function. Get the first $100 before you build anything bigger. The entire remaining build logic depends on that answer. If you are starting from zero, no audience, no product, no existing platform, the entry point is stage 1 of the sequence and nothing else. The extraction step. Not choosing a platform, not designing a cover image for a product that does not exist yet. The extraction step. Sit with the inventory question. Find the moment in the last 2 years where someone came back to you for the same thing. Write the 1-sentence problem statement. If it takes more than 1 sentence, narrow it. The asset that generates passive income is almost always a narrower version of what you think it is. The narrower it is, the easier every stage after extraction becomes. The distribution problem is easier to solve for a specific audience than a broad one. The packaging is simpler when the scope is tight. The first $100 comes faster when the offer is precise. The input is not capital. It never was. The people who never build passive income are not missing money. They are not missing time. They are missing the recognition that what they already know is an asset with a delivery problem, not an income problem. Once that distinction is clear, the construction sequence is mechanical. The machine is built the same way every time. What changes is only the raw material. Most people are already holding